Oh, no, it's okay. It's okay. Actually, I was going to use Alex's file as an example too.
Yeah.
He came up to me telling me that client has no hopes, but in my eyes, she has 2 more shots to go. Basically, squeezing her towel as much as possible, right? And I will share what we have today, the comparison of AAA lending and JCAP private lending. So as a hard money loan officer, we need to compare 3 different things. One is the appraisal value. Number 2 is the processing. Number 3 is the product comparison. We don't have to worry about the processing because we unify all with our VA teams and with GIA. So I'm going to focus primarily on the appraisal value check, which determines the loan to value ratio, and the product comparison of JCAP and AAA lending. The reasons why I didn't include any other hard money loan product today is because they look into credit scores. They have specific requirement. They're not going to waste their time listening to you when the credit score is below 620 or 660. But these two, AAA lending has a product that does not look into credit history, credit derogatories, credit scores, and JCAP private lending. Although the slideshow we reviewed last week shows 620, he also conversed and emailed me separately with GIA and all the processing team that if he personally likes the deal, he will fund. He will give an exception to give the credit. Therefore, I created a chart. AAA lending rate is fixed at 8.99, and we found out the rate can go up to 9.99 when the value goes greater than $2.0 billion. So we have a deal right now. We submitted a deal, value at 1.8 on Zillow and Redfin, quoted 8.9, and client approved, agreed, and we're moving on. We charge 3 points, 2 to AAA lending, 1 to Giving Tree, but we white labeled it. So on client disclosures, it will show 3 points going to AAA lending. AAA lending will fund the loan, record the note, and then reimburse into a marketing fee to Giving Tree within 2 to 3 weeks from the funding date. And what we found out is AAA lending's appraisal management company does a value check before we spend money on it. They did the value check and value came out at $2.5 million. So I thought it was great. I thought I was able to give the client more money, but problem was the rate changed. Counteroffer came in at 9.99. And I asked client that we are not going to keep this loan for long. So he agreed again, and we're moving on. Maximum LTV will be at 70%. Loan size up to $2 million. Anything above $2 million, it has to be exceptional base. What the questions they ask is the purpose of the loan. Where is the money being used to? If we don't have this on the day of the submission, you're going to immediate loan cancellation, and they're not going to review the file once again. You need to know specific itemized list of cash out reasonings. And second, you need to also provide exit strategy. So after 3rd month, what are you going to do? Are you going to see the client foreclose the property? That shouldn't happen. So we also have to provide what other loan product that we can take them out. So the client that I'm working with is we are injecting hard money loan to clear all the finance situations like a nuclear bomb. There are a lot of financial casualties happening. A lot of damages are happening. But this is better than going through all these problems 4 or 5 months later. So he's agreed to make the payment. He's agreed with taking the higher rate. All the problems are solved. And we are immediately going to flex prime product from Carrington Mortgage. It's a PNL product. Anyone with a 720 FICO scores, they are going to give us an exception with all the late payments showing on the credit report, all the derogatories. So I'm going to fix the credit at the same time when we do hard money fundings, so that in 2 months, hopefully we have a CTC with a new credit report that will maximize our rebate and be able to originate both loans. Property types will be primary, second, and investment. They don't care about the cash flow and tax returns. No income, no credit report, no citizenship requirement are necessary. If you have a foreign investor, if you have an ITIN borrower, we can always plug that into this product. It is only available in California. There's no prepayment penalty, and funding happens from 7 to 10 days. And I found out the delay of 3 days is because of a notice of rescission. They still have to follow the Dodd-Frank RESPA rule. They don't have to follow the trade rule, so there's no initial disclosures or closing disclosures. It starts and loan doc comes out. Regards to JCAP private lending, their rates are starting significantly lower than AAA. However, they do the global DTI test at rate at 18% interest only. When the debt to income ratio cannot pass the 45%, then we cannot move the file forward. However, with second home and investment, they can always originate. LTV is capped at 60% for cash out, 65% for the purchase. And if you need to do a bridge, instead of doing a contingent deal, you can encourage the borrower to do a premier bridge, LTV caps at 50%, cashing out and buy another one. I didn't think that this is a workable option, but he's telling me a lot of properties in Costa Mesa and Yorba Linda and Irvine are fitting into this category. So we don't have to talk to anyone in LA. We don't have to talk to anyone. Alex, I'm going to go over the Q&A after I go through everything. So please wait for a moment. And they also do second, unlike AAA, where they do only first trust deed. They do second trust deed with the higher fees and higher rate. But if you see the rate at 13%, this is significantly lower than any other hard money seconds that we have done before. With my seconds, I usually originate 20 to 21% rate, charging fees in between 5 to 10 points. So whatever he's charging in my eyes is very reasonable and very generous. Loan size is $30,000 to all the way to $5 million. So the reason why they offer the smaller loan amount is for them to allow the homeowners to exit out using a line of credit or HE loan product. Again, this is a bridge product that can be used for short term. As long as the cash out purpose is clear and being used for the business purpose, we can always reutilize this, repair the credit, rebuild their credit history, and then take them out to non-QM seconds. We have written VOEs, KNLs, and DSCR seconds that we can imply. Minimum FICO score for those are 680. Loan terms are longer than AAA. They are usually from 12 to 18 months, interest only. Bridge loans are 3 to 12 months. The property types are 1 to 4 units. Unlike AAA, they also accept fix and flip, multifamily, 5-unit plus, and some commercials. No land leases, just the fee simple transactions. And for the bridge, it's only for 1 unit single family. Unlike the AAA, they have to pull their credit. They cannot have any late payment on the subject property. They don't care about the late payment, just credit cards, credit accounts, but they better have clean mortgage payment history on their primary. And as you have seen, no minimum FICO score on core product. This is the key point. Although the slides above at 4 and 7 mentions about 680 FICO score, when we go into appraisal and LTV, this is not the determining factor. LTV will be the most important thing that they will go over. Still, California-based, properties will be eligible, but if you have any like Northern California, why not give it a try? There's no prepayment penalty, and turnaround time for hard money loan. This one also is in between 7 to 14 days. So uniqueness of this product is you can cross-collateralize multiple properties into one note, like SBA loan. So when you do a blanket loan, add these 2 properties into one loan, and when you take them out, you can do 2 different loan transactions. So if you're adding 2 properties into one and dividing them, you'll be able to do 3 different transactions. 1 hard money loan and 2 non-QMs or 2 full docs. So depending on your client, depending on the needs, we can send to the AAA lending or JCAP. If it's an LTV issue, go to AAA. If it's complexity, adding more properties into it, go to JCAP. If the credit is an issue, go to both and see an option. Both options require exit strategy. So the one that Alex had, JCAP said no, because there were mortgage late payments on the mortgage statement and the subject property. But AAA doesn't care. So what we are trying to do is, instead of relying on Zillow and Redfin values, we're going to just inflate the appraisal value and submit it to a AAA lending's database with LTV at 60, and then have them run it. And if they say the value that we provide is available, then we can fund in 7 days. Hard money loan sometimes will give you a lot of stress and uncomfortable situations where your clients may be, going through a foreclosure or any notice of default activities. But in my eyes, those things only happen because of your lack of understanding or lack of delivering, lack of this communication. We must provide exit strategy, and the client must come to us so that we can help them. There are a lot of cases that I've seen originating hard money loan with me, going elsewhere, shopping around the rate in the middle of 3 to 6 months term, and fail miserably. None of the clients lost their homes within my premise, but I've seen more than 20 different cases in the last 2 years. The people leaving me and going through difficult situations. And 2 of them, I specifically remember, came back to me, but they already went through so much. They pulled the credit too many times. They had too many appraisal reports. And some DSCR lenders report their appraisal value, the XML file, they upload it to Fannie Mae and run the risk test. So it got banned. Brenda, I don't know if you remember Danny's file. Louis was blacklisted by all the lenders that we had connections with, so he couldn't go anywhere. So he ended up doing a hard money loan rate at 14%. We saved him. Exit strategy was to go to change wholesale and get it done at rate at 9.25%. Because of Danny's misunderstanding and lack of communication and follow through, he had enough time to fix the credit. He didn't let the clients know. He had an option to go to bank statement loan. He didn't train them what it was. So there were a lot of ups and downs with deposit histories. They had about $700,000 cash. But because of a loan officer's lack of understanding of the product, he could not deliver what was needed, what can be done to save them. It's unfortunate, but it happened. So we just salvaged the file. It's very unfortunate ending, but I told Danny, since he knows, we make sure to bring this person back a year from today and walk with him, check up with him at least once a month to see what deposit histories or cash flow that he's going to report, so that he can take him out from this mess into something better. So don't be afraid. Charge 3, 4, 5 points. There was a file that I charged about, how much was it? 11 points the other week. And there was another one that Wagner funded with Corazon file. We charged 10 points on it, right? When the situation is messy, I want all of you guys to look at it into an opportunity. They will answer your call more, reply your emails and text messages faster than ever before, because there's a specific deadline that's coming up. And when you just give them the confident understanding and breakdowns, specific details, then we can win, easier than any other loan officers out there. Do you guys have any questions? Let's start with Alex. Alex.
Yes. Well, you answered my question in the presentation after. I was just going to say JCAP was like, no, there can be no lates on a second home. And that was the issue I ran with them.
Yep. As long as there's no notice of default, they're going to do title search. Right now, your client has 2 late on the subject, 1 late on primary. So we have about
yeah,
11 days.
11
So Alex,
days.
did
Yeah,
the client provided all the documents that I requested?
she sent in some. I worked on a lot of documents last night. I'm still
Uh-huh.
missing a lot though,
Okay.
and
How
she's supposed
about
to be
credit
faxing
report?
me. No, not yet. Not yet.
The
No.
reason why we pull the credit report is to identify the payoff accounts and see where we need to fix so that we can take her out within 3 months.
Okay.
This